Three things in my notebook this morning. Number one, the Russell 2000. Number two, the bond market. And number three, China. So first on the Russell 2000, I could add the S&P 500 to this. You saw it in the early look this morning. I said I wanted to fade myself. Now, fading myself, of course, means buying and covering on oversold signals. So that's what you got yesterday in both the Russell and the S&P. And the reason was really simple. I thought that the people would have to react to a Q2 GDP number that was going to be good on the headline. Newsflash on that, if you did buy them, maybe sell them by noon because it's Q4 next week. So that's the first point. Russell 2000 risk range there is 1104 to 1138 is the upside for a trade. But again, remember that the bearish trend setup in the Russell 2000 remains, with the Russell 2000 down over 8% since its all-time bubble high established on July the 7th. Now, the 10-year bond yield absolutely agrees with that, but the 10-year bond yield also got oversold into the GDP print. So again, being bullish of bonds was fantastic yesterday. You know it, I know it, that is what it is. But it trades in a range. So the 10-year risk range is 242 to 258. So in other words, if we get back up to 258 on the 10-year bond yield, you buy more TLT, you buy more EDV, you buy more you and me. Just buy it. Just buy bonds, okay? People aren't long bonds. They're along their favorite small cap stock, which is getting pulverized. The final point would be China. In other news, China didn't care about the U.S. stock market bubble imploding yesterday. Chinese stocks up for the third consecutive day, up to 14.6% for the year to date. And yes, we still like long China in Chinese terms. So those are your top three things.